Hello, I hope I can be heard right now. I'm so sorry for the audio, and that is why I always like to get feedbacks in the comment section to confirm that things are actually working well. So thank you very much, Hayodeji, for that positive feedback. I really appreciate that. Thank you very, very much. And so that means I have to restart all over again sincerely so that we can all be on the same page here. So like I said, the first thing we normally do during our live session every day is to keep tabs with the fundamental aspect of the market by ensuring that we know what is really going on from the fundamental aspect of the market. Thank you very much, Ayodeji. I really appreciate that. Okay, so what I was trying to explain earlier is how important the economic calendar is, as we need to ensure that we keep tabs with what is really going on in the market. And one of the benefits of having an idea of what's of looking at the economic calendar is the fact that it helps us in anticipating potential moves by identifying structures prior to the event, during the event, and after the event. And it also helps us in better timing too as well. And what I normally do is to filter out and focus on the high impact events that will be affecting the currency pairs that we are monitoring. And these currency pairs for the week are the pound sterling, the US dollar, and the Japanese yen. And for today, Tuesday, May 23rd, what we saw here was not, we really didn't have any high impact event coming in except for the S&P Global coming in from the UK docket. So I had to include the medium impact event so that we can also see what time the S&P Global publication is going to be happening from the US docket too as well. And beside the S&P Global that we have here, we also have some couple of speeches, like the Fed Logan speech, who is going to be having a speech later on today, I think in about 4 to 5 hours from now. And Logan is the president and CEO of the 11th District Federal Reserve Bank of Dallas. So he's going to be giving a speech on in the next 4 to 5 hours, and obviously majority will want to be looking forward to this speech, as it will be, there's likelihood to have an insight into what the monetary policy statement is likely going to be. And then we also have another speech coming in from the UK docket, and that is Askel. Askel is a monetary policy committee member of the Bank of England, so he's going to be having a speech. So we are going to be looking forward to what he's going to say, as we might likely have an insight into what the economic situation of the United Kingdom is. So with that being said here, let's dive right into the chart. And the first thing we are going to be doing here is going to talk about the US oil. So on the US oil, we have been having an interesting situation here in the last 24 hours on this chart. And in fact, price action has been looking a little bit bullish in this market, not until during the later part of the New York session yesterday that we begin to see how sellers continue to negate all buyers' attempts around that area at the $72.50 level. So we are going to be talking about how important that area is, and considering the fact that it shares a beautiful confluence with that bearish trend line. So let's look at how the week started for us on the US oil. So what we saw here at the beginning of the week was our price action started on the bearish note, as you can see here. So we had selling pressure just right around that $71.85 level. Price action dropped to the downside, and it was at this point we begin to see the appearance of buy pressure, which led into the breakout of that resistance point here, hereby triggering our first buy position for the week. And in fact, I had a couple of positions here actually, And the reason why I bought above the $71.50 level is simply because of the fact that that area was serving as our key level at the beginning of the week. You will remember that we acknowledged the fact that the $71.50 level is going to be our yardstick for trading activity. That is, if price action remains above that structure, we want to be looking out for buying opportunity. And as a result of that, after citing the breakout of that $71.50 level yesterday, a retest of structure with multiple signs that buyers are really getting building that momentum at that point, I had a position there with a second position at the breakout of the $71.85 level. We saw how price action moved significantly well, and I do hope you moved your stop loss accordingly to lock in some profit. As we can see here, the resumption of selling pressure around the $72.50 level negated bullish attempt here by pushing price to the downside. And as at this morning, you would not be in any position right now. And I shared an update on my TradingView platform this morning. So let's quickly go through that commentary on my TradingView platform. So this is the TradingView, and I shared this morning as regards to our current setup. So I said here that price action takes out the buy positions with a small profit as a choppy situation is observed along the bearish trend line identified in the video, hereby increasing the potential for bearish expectation, waiting for a structure to mature at this point. So what I'm going to be doing now, we are going to go back into the live chat. So I want to let you see how important the selling pressure around the $72.50 level is, and the fact that it shares a confluence with the trend line. Now, for us to have a better perspective into what is going on around that area, we will need to scale up into the 4 hours time frame. And on the 4 hours time frame, we begin to see how things have been playing out clearly since the second week of the month of April. And if you remember vividly, I made mention of the fact that price action has been bearish, and to acknowledge the bearish momentum in this market, we connected a series of lower highs here, giving us this beautiful bearish trend line, which has been guiding our trading activity in the last 7 to 8 weeks. I have a couple of trend lines here. So I have the second one here, which already has been broken out of during the course of last week's trading session, as you can see here. So right now, our center of focus is going to be right around this trend line at this point. And as you can see, since the second half of last week, we have seen a situation here where price action had continued to retest that structure. So at every point in time, price action gets into that trend line, we can see how sellers continue to negate every attempt by the buyers to break out of that structure. And in fact, for us to feel comfortable in a buy position based on this current structure, we would need price action to break out of that trend line at this point. But if price action continues to trade below this trend line, then definitely we would have no other choice than to start looking out for selling opportunity. But there's one more thing I would like us to consider here while we look out for selling opportunities in this market. Now, if we go to as far back as the beginning of this month to see how price action has been playing out in this market, you will notice that price action buyers have been trying to break out of this old choppy situation. And as a result of that, we have seen how price action has been finding higher lows, as you can see here. So we have higher lows here to further emphasize how buyers has been struggling to ensure that the flat channel we have here is being broken out of. And for me to buy at this point, like I said earlier, I would need price action to break out of that bearish trend line for confirmation's sake. So at this point, what we are going to be using to guide our trading activity around this juncture in the market is that key level at the $71.50 area. So as long as price action remains above that key level, I would be considering buying the US oil spot. but we will need some confirmation to happen. So we want to see something like this kind of thing, though we have been witnessing some selling pressure here. We want to see price action drop back into that $71.50 level area. And most importantly, I want to see reversal patterns by pressure resume around this area to give me that opportunity to be part of a move. And if it so happens we join the move, a breakout of the trend line will welcome more opportunity at the retest of the trend line, after which another breakout of the $72.50 level will also give us an opportunity to maximize this bullish expectation in this market. Another thing here, remember we have another resistant line here, which is the resistant line of that channel we are in here since the beginning of this month. So if price action breaks out of that structure too as well, then definitely we want to be adding more position, and at that point I will feel more comfortable in being in a bullish position in this market. So that is how I'm going to be looking out for buying opportunity here. So as long as price action remains above our key level at the $71.50 level, we continue to look out for more opportunities to buy this one. Now to sell this, I want to see price action break down that $71.50 level. And if you look at this whole structure closely, you will see how the $71.50 level also shares a confluence with that bullish trend line. So if price action at any point in time breaks down the trend line and the key level at the $71.50 level, then at this point we want to be considering selling the US oil spot at that point, so that we can actually sell even before the breakdown of the $70 area happens. So this is how we are going to be looking out for selling opportunity. And at this point, you will agree with me how important the $71.50 level is from this current structure. So to now be able to trade this, now we want to scale down into our 1 hour time frame. Let's see if we are going to be having any opportunity anytime soon. So when we scale down into the 1 hour time frame, we now begin to see things clearly on how price action has been playing out since the beginning of this week. And you all know we acknowledge the fact that price action had been ranging between the $71.85 level and the $70.65 area, which happens to be the lowest point price action has been for this week. Now, with the situation we had yesterday, we saw the breakout of the $71.85 area. Price action comes into the structure. So let's see how price action reacts to this zone here between the $71.85 level. That was our resistant line for this week, our initial resistant line. We want to see how price action will react to the zone. So we might likely see some choppy situation going around this area for a moment before we start seeing a signal happen. So at this point, I would advise that we remain very, very patient, wait out for the structure to mature. We might likely see something like this happen here, some choppy situation around this area before either price breaks down the $71.50 level to give us an opportunity to start thinking of selling, or a breakout of the $71.85 area to start thinking of looking out for buying opportunity in this market. So this is what we shall be looking at, and trust me, I will be with you right in the comment section to give you update as at when due. If you do have any questions regarding what I just explained so far, feel free to let me know right in the comment section. So with that being said, here I will be moving on to the next pair. And the next pair we are going to be looking at this morning is the which one is that? I think the GBPUSD. All right. So on the GBPUSD, we have been quite profitable since the beginning of the week on this pair after a little choppy situation happened during the early hours of today. So let's quickly run through what was our expectation at the beginning of the week. What did we see in this market that incited that selling opportunity that we took advantage of yesterday? So the first thing we saw in this market at the beginning of the week was the fact that price action was choppy initially. Though we had a situation where price started on a bullish note, so this was where price action started this week, exactly at above our key level at the 1.24500 level, and we saw the bullish momentum continue to the upside. But as soon as price action got into that area around the 1.24720 area, we begin to see some selling pressure come in, negating all attempt by the buyers to break out of that structure. And as a result of this, we had a flat channel, as you can see here. And with a flat channel like this, you know what we do here in the market. We want to look out for signals in the form of a breakout or breakdown of the channel. And if you look at what has been happening here since the beginning of the week, you will see that sellers were actually the one initiating the pace in this market. As we saw the first breakdown here, and this was prior to our live session yesterday. And I told us all yesterday that if we are going to be selling, we want to see price action come back to do a retest of that structure, selling pressure come in to incite another wave to the downside. And that was exactly what happened here. We saw price drop to the downside here, came back to do a retest, but not around that area. It went to as far as the resistance line of that channel before we started seeing some selling pressure. And with a sell stop order right below our key level, we are opportune to be part of this bearish move to the downside. And yesterday, I shared an update here yesterday where I said another breakdown of the 1.24150 level will be welcoming another position. And as you can see, since the beginning of the week, we saw how this level had been negating selling pressure. And if it so happens that price action breaks down that level, then definitely it will have been a beautiful sign for us to sell. So as a result of this, we had a sell stop order below the 1.24150. And at this morning, I shared here that we should ensure that we secure all our sell position. So at this point, we have two sell positions. Okay, we have three sell positions running. Two are already running in profit, and the third one is actually in a little loss at this point. So my advice at this area is that we want to be moving our stop loss right now. Congrats to everyone who had been part of this move. So the next thing we want to be doing right now is to move all our stop losses. And where do we want to move our stop loss based on this current structure? You all know where that is. We want to have it at around the structure here, around the 1.24150. Anywhere around that area, move our stop loss there, secure the current sell position, and let's see how price action will play out going forward. And if it so happens that price action continues to the downside in such a way that it breaks down the 1.23900 level with selling pressure below this area, then this will give us more opportunities to add more position to our existing trade. So let's keep on holding on to our sell position in this market, and let's see how price action plays out. Unless structure states otherwise, we have no reason to change our bias from bearish to bullish at this point. So let's see how price action plays out, but rest assured that I will be with you in the comment section of both my TradingView and Telegram platform to give you updates on what our plans is going to be like for going forward. So if you have any questions whatsoever regarding what we just explained here, feel free to let me know in the comment section, and trust me, I'm willing to be of help in that regard. So I will be moving on to the next pair at this point, and the next pair we are going to be looking at is the is it the USDJPY? Okay, we are going to be looking at the USDJPY next. And on the USDJPY, we actually had some opportunities to buy the USDJPY yesterday. And in fact, price action moved significantly well in our favor before we were taken out. It moved about 70 pips, and I shared here after price action tested the 138.600 level that we should be moving our stop loss accordingly to secure our position. Let's quickly run through the USDJPY commentary on my TradingView platform so that we can all be on the same page here. So I let's see here. Okay, this was how the week started for us on the USDJPY. So we saw this choppy situation. Price action was ranging between the 138.00 and the 137.500 area, just right around our key level, to give us an insight into the level of indecision in this market. And you know how we do it here. Whenever we have this kind of flat channel, we want to have a buy stop order above the resistance line to capture that move, or a sell stop order below the support line to capture that move. And what we saw here was quite interesting, as we saw our price action broke out of the 138.00 level to trigger our first buy position for the week. And it was at this point I told us all to secure all our buy position, as we look out for more opportunities had the breakout retest of the 138.750. So we needed a breakout retest of the 138.750 because of the fact that this area had been a strong selling niche at one point in time. And we saw what happened here. We were taken out of that position. I did an update here. Trade closed manually. Price action takes out the buy position with a small profit, waiting patiently for another trading opportunity. And for the last 24 hours here, we saw how choppy the market was. And this morning, I shared an update here saying that price action remains choppy in the last 19 hours, with the possibility of a potential retracement in anticipation of the uptrend. However, a breakout retest of the 138.750 zone will welcome buying opportunities. So let's go back into the live chat and see what is really going on here and how we intend to position ourselves ahead of the London and the New York session today. And in order to do that, we want to have an holistic perspective of what is going on here. And to do that, we want to scale up into a much more higher time frame to see what is really going on around that area. Now, we are right on the 4 hours time frame right now, and this was the key levels we identified at the beginning of the week. So we had a double bottom structure, which incited the impulsive move we saw last week. So we saw the double bottom structure here. We had the neckline of the double bottom structure at around the 135.250 level, as you can see here. Hold on a second, please. I'm trying to... Give me a moment, please. Sorry. Okay. Sorry about that. So we had the neckline of that double bottom structure around the 135.250, which we saw the breakout of that structure right here last week, and we rode the move all the way to the upside. And since then, price is yet to come back and do a retest of that structure. And because of the situation here, there is a chance that price could still come back and retest that structure at any point in time. I'm not saying this is concrete yet. It's still something we are keeping in the pipeline. So after the breakout of the neckline, we expect that from a technical standpoint, that price is likely going to come back and retest that structure in anticipation of a trend continuation. So this was what I was explaining in my commentary this morning. And when we start seeing selling pressure come in around the 138.750 level, as you can see here, since the I think since Thursday of last week, we have been noticing this selling pressure around this area, which is a sign that buyers are finding it very, very difficult to break out of that level. And if you look at this from a psychological standpoint, and considering this impulsive move that started last week into this area, you would agree with me that a retracement phase seems long overdue, and there is a chance that price action could transition into a reversal pattern, probably like a double top structure, where the neckline, which is our key level at the beginning of the week, will be broken to the downside to incite a retracement move back into the neckline before another wave of bullish momentum happen. And of course, if we do going to have a retracement phase at this point, we are going to be part of that move. Now, how do we intend to take advantage of this opportunity, and why am I considering a retracement phase at this point? Now, if you look at the bullish momentum we saw last week, I connected the higher lows here, giving us this bullish trend line, which happened. And you can see that throughout the course of last week, that line was respected. And at no point in time did price break down that structure, not until Friday of last week we saw the breakdown of the trend line, which happened. And when price action breaks down of a key structure like this, we expect that one point in time it will come back and retest that structure. So you can see we have a beautiful confluence as a retest happens on the trend line. We also have price action rejecting the 138.750 in the last 24 hours right now. For me, I'm considering that this might likely incite a sell-off in this market. And if this is going to be happening, we might likely see a reversal pattern in the form of a double top structure, which will only be confirmed or validated when price action breaks down the neckline, which is at our key level at the 137.800 before we want to be joining that decline to the downside. Now, the question at this point is, how are we going to wait the whole 50 to 60 pips move before we join the bearish move to the downside? Of course not. So how do we plan to join that move, maximize this potential bearish momentum if it's really going to turn out to be a retracement move? Now, things will now become very clear when we scale down into the 1 hour time frame, as I was able to spot a key level that we can actually use to guide that potential move to the downside. And what I saw here since the New York session yesterday, we have this 138.400 level, a level which has been a strong buying niche, as we can see here. When price action broke out of the structure during the early hours of the New York session yesterday, we saw multiple rejection of that area by the buyers, giving us a platform where buyers are trying to incite the second wave of the bullish momentum. But as you can see here, price is back into that structure, and it appears we are having a little breakdown of that level if we consider what has been happening here in the last couple of hours. So now, for us to join the bearish move, we want to see price action break down, retest the 138.400 for us to be part of that move to the downside. So I want to see something like a breakdown retest of the structure here. So if you are actually taking advantage of that move right now, it quite makes a whole lot of sense. So kudos to you for being on standby, and I hope your stop loss is somewhere right around the resistance line, or probably around or above that area, with a stop loss of about 30 to 35 pips is quite okay for this current structure. And let's see how far this momentum is going to go. And one thing about this momentum here is that it's a counter trend opportunity. So we want to be very, very careful and be around on the chart to ensure that we protect our position by moving our stop loss accordingly when price action moves significantly well in our favor. So if you are not yet in this trade well, I would advise that you remain patient, wait for structures like a retest of this level, come back, selling pressure resumes below the structure in our lower time frame, then we could actually join that decline to the downside. And remember, the 137.800 is the neckline, the proposed neckline of that potential reversal pattern we identified on the 4 hours time frame. And if price action does a further breakdown of that structure, we'll have no other choice than to look out for more opportunity at the retest of this level to the downside. So our TP target on this one is going to be around the neckline of that reversal pattern we identified on the 4 hours time frame. So let me show you that quickly so that we can be on the same page here. So let's go into the 4 hours time frame. So this is the 4 hours time frame, and remember we had the neckline of that double bottom structure here. So we had the double bottom structure, we had the neckline at the 135.250, we had the breakout of that structure, And if this turns out to be a reversal pattern, we want to see price action come back into the neckline here, where we are likely going to be seeing another wave of bullish momentum happen around that area. So we are going to be, this move here is going to be dovetailing into over 300 pips on this one. So let's see how price action plays out, and this will be quite a very massive one for us to be part of. So that is that on how we are going to be looking out for selling opportunities in this market. And trust me, I will be with you on both my public platforms to give you an update on what will be happening if anything strange comes up at any point in time. Now, you know how we do it here. In as much as we are looking out for selling opportunities in this market with the hopes that price might likely retrace as a result of profit-taking activities, we cannot ignore the potentials of buyers at this point in time. And considering the fact that price has been bullish since last week, we also want to ensure that we plan the potentials of the buyers into our repertoire for today. Now, what do we want to see on this chart that will give us the confirmation and confidence to change our buyers from bearish to bullish? Now, the only thing I would want to see on this chart that will give me the leverage to buy the USDJPY today is to see price action take out all the sell positions around the 138.750. Remember, this level had been a strong resistant line in the last 4 days in this market. So I want to see price break out that structure, close above that level, and see go down to my lower time frame, see a retest of structure where the appearance of buying pressure resumes, giving me signs that sellers are finding it difficult to drop back below the 138.750. Then at this point, I want to consider buying the USDJPY. And I'm very sure we might likely be seeing multiple entries on this one, but that will depend on how price action reacts above the 138.750 at any point in time. So this is what I'm going to be looking out for today on the USDJPY. If you do have any questions, feel free to let me know right in the comment section. So moving on to the last instrument for today. The last instrument we are going to be treating for today is going to be the XAUUSD. Let's see the XAUUSD. And on the XAUUSD, we have been quite profitable on this pair. It's a very simple setup we have on the XAUUSD in the last 24 hours. Remember, we acknowledge the fact that we have a key level at the 1,980. And the activities at the beginning of the week was quite simple enough to understand the intention of participants in this market at the beginning of the week. So we saw selling pressure begin just right around our key level at the 1,980, leading into a situation where price action fell into a choppy situation where price was ranging between the $1,982.35 level and the $1,971.50 area. And you know how we do it whenever we have this kind of choppy situation. We want to see price action either break out or break down the channel for a trading opportunity. And with our sell stop order below the support line at the $1,971.50 level, we had our sell position triggered, and since then price action had moved significantly well in our favor, over 170 pips in our favor before this old choppy situation has begun here. So for those who have been part of this profitable journey so far on the XAUUSD, well done to you for being on standby to have caught this move. So at this point in time, you know how we do it whenever price action moves significantly well in our favor, we want to move our stop loss accordingly to lock in some profit. And based on this current structure, my advice here is to have your stop loss anywhere right above the $1,963.70 level. It seems most appropriate to have our stop loss so that we can actually give room for price action to breathe, with the hopes that we could have a retracement that will incite the trend continuation to the downside. Now, for those who had missed out on this opportunity, it's okay. Let's see if the market will be presenting to us another chance to be part of this move. So what is going to be our plans as we get prepared for the London and New York session today based on the structure? So the first thing I would like to do here is to redraw my bearish trend line, since price has been bearish since the beginning of the week, as this is going to be our yardstick to guide our selling opportunities in this market. So I would want to connect the series of lower highs, and if we do that correctly, okay, we have something like this. So I'll extend that out a little bit. So going into the London and New York session today, the trend line here will be our yardstick. So there is still a likelihood that price goes to come back into the trend line to retest it at any point in time to incite a trend continuation to the downside. So if price action continues to the upside, we don't need to get worried about that. It's likely going to be a retracement of that impulsive move that started this week. So let's see how this is going to happen. So we are looking forward to price action coming to retest that structure at any point in time. And if that does not happen and instead price action continues to drop to the downside, then at this point we want to have a key structure we are going to be using to guide our trading activity going down. So for this to happen here, I'm going to be having something around the $1,957 area. So let's mark that out on our chart. So we have the 1,957 level. Okay, so we want to see price action breakdown, retest that structure. Now the reason why I need a breakdown and retest of that structure is simply because of how this level had been a strong demand zone since last week Thursday. So you can see when price action got into the structure, we saw how buyers negated all attempt by the sellers to break down that level. So if it so happens that price action breaks down this area, we want to scale down into our lower time frame to look out for a retest. Just a little retest is okay to confirm that sellers are gradually gaining that momentum. So if that happens, we want to be part of the bearish move, add more position to our existing trade, and then we can join that move all the way into our TP target, which is situated around the 1,940 and the 1,934. So these are my perspective for the XAUUSD to sell for today. So as long as price action remains below the trend line, we feel comfortable in our sell position. However, if the opposite happens here and this old area turns out to be another demand zone for the sellers, as you can see since last week, we have been seeing how that area had been a demand niche, a buying niche in this market. So I would like to label this area, mark it out so that we can have a visual representation of this buying zone. And I always like this to be light in color. Okay, so we have a demand zone here figured out. So if this whole area turns out to be impossible for sellers to break down that structure, then we might likely be seeing this as a platform that might incite another wave of bullish momentum. And if this is going to be the case, what we want to see here, you see I have a structure around the 1,964, which is something like a platform that will guide buying opportunities if price action breaks out and retest that structure. So let's label this area. So we have the 1,964 level. I will have this at the top right hand side, and here we go. Let me make this a little bit smaller. Okay, so if the buy pressure at the 1,957 area continues, that is, if this whole buy pressure continues, that is, sellers were unable to break down that level, then we might likely anticipate a buying opportunity. And if this leads into a situation where price action breaks out of the 1,964 and continue buy pressure above this area, we are going to be in for a buy position. And if this further leads to the breakout of that trend line, which we identified earlier, which has been supporting the bearish momentum that we have been enjoying so far, then at this point it gives us a sign that the trend line may no longer have the capacity to negate all bullish attempt anymore, and at that level we want to be thinking of adding more position. But trust me, I will be in the comment section on both my Trading View and Telegram platform to give you updates when structures gives us an opportunity to trade. So these are my views here on the XAUUSD. So I was able to explain how we are going to be selling and adding more position to our existing trade if price action breaks down, retest this level to the downside. And if it so happens that buy pressure continues above the 1,957, leading to the breakout of the 1,964, buying pressure above this area, breaking out of the trend line will welcome buying opportunities in this market. So I hope we be on standby to catch any of these opportunities today. And with what we have shared here, I'm very confident that we are able to simulate all the potential trading opportunities that are likely going to happen on the instrument that we have chosen for the week. So at this point, I would like to call it a day here. It has been a wonderful moment with you guys, and I hope to see you right in the comment section on both my Trading View platform and my Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.